I'm very pleased to welcome back to the show now Dr. Michael Berry. He is the co-editor of Disruptive Discovery Journals, been a great friend of the show. I always refer to this fact, but I think it's over the last 8 years or so, he's been a guest lecturer for the Federal Reserve. It's like twice a year he's going to do it. He's testified before Congress on a variety of things, especially, though, in the natural resource policy, strategic mineral supply chain development, that kind of stuff. Welcome back to the show, Dr. Berry. Thank you for finding time today.
Hey, Michael, great to be back. Good to hear your voice.
I love it that you've just been traveling, and welcome home, and you've got to do an interview with us. So it is much appreciated.
Look, let's roots in Canada.
Well, there you go. Let's start with, an overview of what's going on. We've watched this. I forget what it is now. 5 or 6 consecutive days of record highs on the Dow Jones. You've watched a lot of goings on in terms of Trump doctrine, where he's talking about being much more pro-business. He's signed that executive order that says we're going to reduce regulation. For every new one you introduce, you got to reduce 2. We're getting a new, in his words, phenomenal tax change plan coming to us in the next couple of weeks. That's the environment we're operating in. What do you make of it all?
It's a very difficult environment to analyze because the markets seem to believe him. The bond markets, stock markets, the currency market, gold and silver, moving up and lots of volatility. But I hearken back to the last time I presented at the Fed was September the 2nd. And at that point, the Fed was absolutely out of bullets. They didn't know what to do. We were sinking into a deflation. I'm not saying we're not now, but he has inadvertently, perhaps unconsciously, saved the Fed, because now the Fed actually has something to do. They're thinking of raising rates because they're worried about inflation. I don't see that yet, but Janet Yellen does. The odd thing about this, Michael, is that Janet Yellen and Trump are at real loggerheads. They do not like, I think it's fair to say they do not like each other, and she will not be reappointed likely at the end of her term this year. But right now, the market is believing, and they're giving President Trump, a chance to show that he can pull this off. A tax deal is important. Both the Democrats and the Republicans want to build out a fiscal program of infrastructure, and we need an infrastructure build out in the U.S. And of course, then that's going to have tremendous positive impacts on copper and zinc and lead and all those things that we deal with, that you and I and many of us deal with. So right now, even though Trump is under tremendous pressure from the intelligence agencies and from the Democrats, they haven't even approved his cabinet in total yet. The markets are giving him a chance, and the markets are saying yes to him.
Well, one of the things that's a little bit different, and people can have whatever preference. I don't care about their political preference, but they can have one. But it is very different and striking in this difference compared to President Obama when he came in, who had other agendas, and Obamacare sort of dominated, especially early on. The one thing you can say is Mr. Trump is totally focused on, he's got his immigration stuff, but even more so, I think it's the jobs and the economy talk. That's what a lot of these orders have certainly directed for. And as you say, the market certainly is greeting that positively, if for no other reason than all the focus on those areas.
Absolutely. In this country, in the U.S., the left is loud. The left is rather disorganized, actually, now. They're going down a road, I think, that will not benefit them. But the rest of the country, a great deal of the country that is not loud, supports Trump. And they're giving him a chance, and he needs to get his act together. He needs to get his team together. It is not a finely tuned White House. On the other hand, Obama's wasn't, and Clinton's wasn't. And you can go back down the list, and you find that, for the first 6 months or so, most of the new presidents have had stumbles. The problem with Trump is he can't keep his mouth shut. I mean that. I don't mean that the wrong way. He says things that drive people crazy. So he gets more attention that way, and his administration, I think, looks more frail because he's always saying things that are rather stupendous, you know.
Well, one of the things, though, in all that talk, though, is that we've seen, as you say, I think the noteworthy thing, I look at him, he's the president, so that's my environment that I'm investing within. You know, that's what I have to take into account. It's the political debate's completely other story, and I think it's a mistake if you're looking at your finances, your investment, not to have that as the attitude. I mean, what I'm seeing in the States is, my goodness, I don't recall this, and it may just be my lack of perspective, but I don't recall that they continued to fight the election every day of the week since the election. You know, it's the same old stuff coming up with him and or against him, but that's not helpful, I don't think, if you're talking about the investment environment.
Well, I try to make that case with people that I know that are on the left, that, look, he's going to be the president for the next 4 years. You have to think about the country. You have to think about not only the country, the world. I mean, you know, the U.S. is the strongest country in the world, and he's the leader. But there's so much antagonism here now. I've never seen it like this before. I've been down here now for over 40 years. I've never seen so much antagonism, and that's hurting the country. And so, you know, the markets are going to react to this in due course. I'm hoping that he can get his cabinet together. I'm hoping that he'll listen to his people. I'm not sure he will. I'm hoping that, you know, he'll have good advisors that can help him out a lot, because otherwise it's going to be a really rough 4 years. They have not accepted him. The left, the progressives, have not accepted him as their president, and I'm not sure the intelligence community has either, because these leaks that are coming out now are very damaging, not only to the Trump administration but to the country. And if you read the New York Times and the Washington Post, I mean, they're just so biased now that it's not even news anymore. It's just this left-wing bias in the country. So, and it's very loud. So it's a serious problem that we have right now.
Let me come back to the commodity market for a second, because that's been one of the major stories. Obviously, it's helped, or it's been a main catalyst, I think, for propelling the Toronto Stock Exchange to record highs, along with our, bank stocks, et cetera. But I'm looking at some of those numbers. I mean, copper's up like about 45%, from the lows last year. Lumber's about the same. I mean, coal is up about 100%, isn't it, from the lows? As you've just mentioned, gold, silver's had a really nice run, 30%, aluminum, 30%. Everywhere I look, you've seen a pretty en masse commodity move coming off of those lows that get juiced by that, as you say. One of the aspects of the Trump approach that is not going to be as contentious is the infrastructure build, which, he's talking $1 trillion. And as you say, the Democrats aren't going to oppose that aspect of it. So does that sort of put the big green light on the commodity sector now?
Yeah, well, it's certainly one of the factors that has made the commodity sector. The other thing is, because nobody's really sure, both gold and silver have silver in particular has in industrial value, but they both have monetary value. So, I think there's a lot of opportunity for people to diversify a little bit and around the world into the precious metals. But yes, in terms of zinc, if you look at zinc and copper in particular, we're seeing all kinds of trouble around the rest of the world. The South American copper miners are going on strike. Indonesia, who knows how Freeport-McMoRan is going to do in Indonesia with its big copper mine there. And so all of a sudden we're seeing copper at $2.70, and I think copper's got $3 nailed before this is over with. And we have some 3,000 bridges that need to be completely rebuilt here, and it just goes down the list. So that is certainly one factor in this country that has been ignored over the long term. And that will get attention. The other thing is there will be a tax cut, and there will be a tax cut for U.S. corporations to bring their money back into the country, to repatriate their currency, their monies that are overseas. And that will have a tremendous impact on the economy as well. So we haven't seen growth yet, and we really haven't seen inflation yet. The Fed would like to think we have, but if those things happen, if Trump can pull those off, if he can focus on one aspect at a time and get it through, and not alienate his own people in Congress, his own Republican people in Congress, then he's got a real chance. if he survives the first 6 months without going crazy, he's probably going to be a very tough, very positive president for the country.
I'm talking with Dr. Michael Berry, co-editor of Disruptive Discoveries Journal. You can find it. All you have to do is go to www.discoveryinvesting.com, www.discoveryinvesting.com. I got to take a break. I'll get more implications of the sort of what's going on in that the Trump approach. I'm talking about the markets, but I also want to get back to him about interest rates and what that scenario holds, what he thinks the Federal Reserve is going to do after they made their announcements. But in December they raised rates, but said there's more to come. I'll get his perspective on that. So stay with us right here on the Money Talks Network. You can find Dr. Michael Berry, co-editor of Disruptive Discovery Journal. That's easy for me to say. Can I try that again? Dr. Michael Berry, co-editor of Disruptive Discovery Journal. But I'm telling you to go to www.discoveryinvesting.com. Dr. Berry, before the break, we were talking about some of the impact on the commodity market, an area you know extremely well. You presented to Congress on natural resource policy. But let me come to the other just for a second, because, one of the things I feel privileged to have you on the air is I love to get people who know what the hell's going on, and you know what the hell's going on with the Federal Reserve. You get a chance not just to present a couple times a year to them, but to chat with them and get their mindset. Are they kind of feeling like a lot of people, they're not sure what to expect with the sort of Trump presidency, so it sort of gets them on edge?
Chairwoman Yellen is very outspoken about her relationship, has been in the past week, very outspoken about her relationship with the White House. They don't like each other. She wants to stay independent. She does not want banking regulations removed. Trump wants to remove banking regulations to free up the banks, to make them better lenders, to make them cheaper lenders, and so on. So there's a lot going on between the Fed and the White House to start things off. The Fed definitely wants to get off zero on interest rates. They have wanted to do that for the last 11 years. They have not been able to. Now they see a little bit of light creeping into the situation, because it seems like the economy is growing faster. It seems that way. And that remains to be seen. So the markets are discounting a higher rate of growth, and they're starting to discount higher rates. And the Fed is saying, we're going to try and raise rates 3 times the Fed funds rate 3 times this year. I don't think they can do that. The current, in March, it's a 35% probability that they will do that. But they need to get off zero. They need... their job is to keep rates from going too high, but they have to keep rates up. So that's where they are now. Keep in mind, we have $17 trillion all in all forms of debt in this country. So if rates go too high, rolling that debt over is going to be extraordinarily expensive. On the other hand, Michael, those of us who are over 50 or 60 and our bond investors have been screwed basically for the last decade on low rates. I mean, we've had our wealth confiscated by the government. So this is a real battle. It's a really important one, and how Trump handles that with respect to the Fed may well define his presidency.
I'm so glad you're bringing that up, and you've described it beautifully, because the word 17 trillion sort of the phrase just rolls off the tongue, but it's mind-boggling to people. I mean, let's keep in mind, in Canada, you're talking about a whole economy in a year's worth about 1.7 trillion US. I mean, whatever that number is. So you're talking about a debt load in the States that is astronomical, as it is throughout the world. But that's the point about raising interest rates that has people concerned, is that you can't really have a significant bump up in interest rates without costing on the deficit front because of interest charges, and then in the economic front with companies having to pay higher interest charges without hurting economic growth, the deficit position. That's the tug of war that I'm watching, and just wondering, can they afford to have any kind of a really significant jump, like let's say 2% higher?
Well, the only real issue is there going to be real inflation that the Fed fights, or is this a phantom that they simply want to get off zero and start refunding debt that they own 20 some odd percent of the Treasury market now? But if you raise rates too quickly, this market will will bubble down very quickly. The bubble will burst. This is a classic equity bubble that we're in. I mean, I'm watching this thing literally from day to day. I'm watching stocks go up, and I'm not sure the economics, the growth and the productivity. I mean, I'm not sure it's all there right now. So it's a very difficult tightrope that they're walking. If Trump can put people back to work in this country and allow the Fed to keep inflation in check, and we get 4% growth, we can buy that debt. We can buy some of that debt down. But frankly, we're in a bubble right now that's quite dangerous, and interest rate policy is unknown. Right? I hate to say that, but the Fed says they're going to raise 3 times this year. That is not going to happen. It is not going to happen. But
well, it's a great it's a great excuse for me to say we've got to have you back on when the fog starts lifting there. Dr. Michael Berry, so much appreciated you finding time for us today.
My pleasure, Michael, always.